Hey guys, welcome back to our channel. As 2023 is winding down, all attention is now shifting towards next year, 2024. People are getting ready to adjust their investment portfolios. If history repeats itself, the upcoming year could be quite explosive for the cryptocurrency market. The recent news about CZ stepping down from Binance and facing a $4 billion penalty initially caused a stir in the markets. However, settling a big court case like this typically signals positivity. We've just emerged from a tough phase, a crypto winter where everyone's portfolios took a hit, dropping anywhere between 50 to 90%. Now, it feels like we're transitioning from that crypto spring into what seems like a promising crypto summer. After hitting rock bottom during the epic crypto winter, the market has been showing higher highs and higher lows. Interestingly, the latest high brings us to a similar point as the last two cycles. It's kind of uncanny, right? Cryptocurrency seems to be following its usual patterns. It has seen some surges and crashes earlier than anticipated, yet currently, it's more or less where it's expected to be. Actually, due to diminishing returns, it might have risen a bit higher than it ideally should have, hovering around $30,000 to $31,000 when it should be closer to the 2x level. Regarding future price movements, a minor pullback in the coming weeks would not surprise me, but I don't foresee Bitcoin dropping below $30,000 unless there's a major unexpected event. Even with the significant news about CZ's departure from Binance, the markets have remained quite resilient. As for the future cycles, the massive gains of 200 times and even 100 times might not repeat themselves. The next cycle is likely to resemble the third cycle, which capped at a 20 times increase. It's plausible we might peak at around a 10 times increase this time. One intriguing aspect to note is the impact of major events like the global pandemic. While another pandemic might not be on the horizon for next year, a recession could occur. If it hits hard, a downturn in the crypto market could follow. Oddly enough, as the year progresses, such an event might unfold. However, for those with cash, it could be an amazing and excellent buying opportunity. For those fully invested, sitting it out might be the best approach as it usually passes in a few months. Despite any potential setbacks, we believe crypto will likely outperform other assets by year end. Still, in the short term, a pullback in the next few weeks seems possible before gearing up for the next halving. Considering Bitcoin's seasonality, November and December historically have seen more down months than up. This aligns with the recent significant increase, suggesting a slight pullback might be on the cards. However, a 5% or 10% Bitcoin dip could mean a more substantial decrease of 20% to 30% for alternative cryptocurrencies. Mentally preparing for some market shifts might be wise. Nevertheless, despite recent developments like the major Binance news, the crypto market has shown remarkable strength, still up by 5%. We anticipate the buzz and anticipation surrounding the halving and ETFs to likely kick in by December. Let's glance at the significant developments from the past few weeks. There have been twice as many as we usually cover, which is quite surprising. We'll quickly run through these, but if you want more details, simply search for the headlines to read the full articles. First up, Catalan Long's Custodia Bank has finally launched Bitcoin custody after a long and arduous process. This US bank overcoming the hurdles to get the green light for Bitcoin custody is a huge win and definitely a positive sign for the market. Moving over to Thailand, their fourth largest bank just made a $100 million investment in a crypto exchange. This shows a global trend of banks eagerly diving into the crypto world, which is super promising for Thailand. Now, let's talk about Hong Kong. Standard Chartered, a major bank, has launched its crypto platform called Zodia. This shift is significant, especially considering China's recent pivot towards being more crypto-friendly. And there's more in Hong Kong. UBS Group is now allowing their high-net-worth clients to trade some crypto ETFs. It's incredible to see major banks stepping into the crypto game, especially considering HSBC's plans to start digital asset custody for institutional clients. Remember, folks, we are in the space before the big institutions. Did you also know there are Bitcoin ATMs popping up all across the US? These machines let people buy and sometimes sell crypto tokens using cash. At their peak, there were around 34,000 of these ATMs during the peak of the crypto craze from 2020 to mid-2022. Jumping over to the UK, PayPal has just secured a UK crypto license after a brief halt. That's fantastic news. However, it's a bit odd as politicians in the UK express interest in becoming a digital crypto hub while some banks resist. Nevertheless, it's a win to see the UK regulator, the FCA, giving the green light to PayPal. Additionally, Robinhood is gearing up to expand its crypto trading into the EU and open a UK brokerage in the upcoming weeks. That is some exciting stuff happening in the UK. Traveling to Switzerland, known for being crypto-friendly, Switzerland has a top Swiss bank now offering Bitcoin and Ether trading with SIBA. It's great to see more banks not only embracing Bitcoin, but also venturing into Ethereum. Over in Germany, DZ Bank, the third largest bank there, is launching crypto custody for institutional investors. DZ Bank is also stepping into digital assets custody built on blockchain, signaling bullish moves from Germany. Commerzbank is not far behind, being the first full-service bank in the country to receive a crypto custody license from local regulators. HSBC, another global banking agent, is set to offer tokenized securities custody services for institutions in 2024. This aligns with their recent moves into tokenized gold and issuing digital assets. It's clear that this next phase involving institutions is all about digital assets and not just crypto. Well, have you ever heard of Disney? I mean, who hasn't? Disney just launched a new NFT platform. NFTs hold immense potential for companies like Disney, opening up new revenue streams. That is definitely a bullish move. And in China, Boya Interactive, a gaming company, plans to invest $90 million in Bitcoin and Ethereum from its corporate treasury. This kind of corporate investment in cryptocurrencies is phenomenal news, especially coming from China. Now back in the US, the Vacaville firefighters have become the second union in the country to hold Bitcoin on their balance sheet. It's pretty awesome, right? Now, remember BlackRock filing for the spot Ethereum ETF? That was huge. Fidelity is following suit, signaling that it's not just about Bitcoin. Ethereum is next on the list for these major money managers. And lastly, in South Korea, their national pension fund invested $20 million in Coinbase. This is remarkable because huge pension funds usually avoid high-risk investments. This news is a fantastic note to end on. With all this positive news worldwide, we have high hopes for next year. It seems like a pivotal year where digital assets could take a giant leap forward. Yet there's a potential spoiler. If a severe recession hits, it might cause a significant sell-off in risk assets. However, the crypto market, being forward-looking, has already experienced substantial crashes in the past, especially during the global pandemic. Even if other sectors like real estate suffer, crypto tends to recover swiftly. As the tide seems to be turning positively, we are optimistic that next year is going to be a massive year for crypto. Remember, there's always a chance of unforeseen events, so it's crucial to invest wisely. We hope you found this breakdown interesting. Feel free to share your thoughts in the comments below. If you enjoyed this video, a like would mean a lot. Thanks to everyone who supports our channel, and catch you in the next video. Have a wonderful day.